Good afternoon. Let us begin the Financial Investment Session of FSS Speaks 2021. This is Hyunjin Kim of International Affairs Department, and I'm the MC for today's event. As you are aware, this year's FSS Speaks will be broadcasted online due to the ongoing COVID-19. We'd like to notice that we're complying with the disease prevention guidelines in hosting today's event. And please be reminded that English interpretation will be provided on the English channel. In addition, I'd like to thank you all deeply for taking part in today's event. We'll begin the event with the keynote speech of Governor Seok-Keun Yoon of the FSS.
Ladies and gentlemen, it's a great pleasure to speak to you as we open FSS Speaks 2021. First of all, I'd like to extend my warm welcome to distinguished guest presenters and other participants joining us today. As you may notice, now is the second time we are hosting this event online, following last year's first ever Untitled FSS Speaks. Given the persisting difficulties posed by COVID-19, I believe continued communication between the FSS and foreign financial companies has become more meaningful than ever before. As more vaccines are deployed worldwide in recent days, both the OECD and the IMF are making upward revisions to the growth rates of the Korean economy along with the global economy. Certainly, this has boosted high hopes for economic normalization in Korea and worldwide. However, while we look forward to a better future, we must bear in mind that our end goal should not be to return to normal, but to recover into a greener, more inclusive, and more resilient economy. To this end, we need to pursue a wide range of policy goals, such as addressing inequality, setting new targets on issues like ESG, and discovering new growth engines. Among those overarching goals, tapping into emerging industries like digital and green sectors is gaining worldwide attention because they are believed to be the main drivers of economic growth going forward. Under the circumstances, I believe Korea stands at a critical juncture in her path towards the so-called Great Reallocation, which is to devote more resources to new growth engines. And finance, indeed, serves as the very heart of this change. This is because, as you may all agree, the fundamental role of finance is to effectively allocate resources among industries with high growth potential and thereby invigorate the real economy. Distinguished guests, ladies and gentlemen, while I do realize that such roles and responsibilities may be daunting, I ask all of you to play a key role and share insights among ourselves along the way. Once Korea keeps on innovating her industrial and economic structures, I'm sure she could soon play a leading role for the green economy by making use of her renowned position as a digital powerhouse. And in an economy where innovation sprouts and productivity blossoms, foreign financial companies will naturally enjoy plenty of opportunities in return. So, I want all of you to join Korea in this journey to a mutual growth. I look forward to a fruitful discussion today. Thank you.
Thank you everyone for your attention. Before we begin, I'm going to explain you to how today's event will be run. Today's event will last for about 100 minutes, divided into the first and the second session. For the first session, which will last for about 50 minutes, we will listen to the supervision and examination for the financial investment sector, followed by a Q&A session. And in the second session, we'll listen to the supervision and examination for the asset management sector, followed by a Q&A. We're going to take questions through written comments, and we look forward to your active participation as we would like to answer to as many questions as possible. If you have any questions, please leave a comment with your name, company, and position. Now, let us begin the first presentation session. We're going to have the presentation on supervision and examination for financial investment sector by Director General Kyung-sik Lee of the Capital Markets Supervision Department and Director General Won-woo Choi of the Financial Investment Examination Department. Let us welcome Director General Kyung-sik Lee.
Good afternoon. I'm Lee Kyung-sik, Director General of the Capital Markets Supervision Department. I'd like to express my gratitude to all of you from foreign financial companies to attend today's FSS Speaks. The prolonged pandemic situation is hindering chances to communicate, and I believe today's 2021 FSS Speaks will serve as an online forum for meaningful communication between the authority and the industry. Before we start, I'll briefly explain today's session for the financial investment sector. The session starts with the supervision direction for the securities companies from the Capital Market Supervision Department, and examination direction from Financial Investment Examination Direction will follow. We hope this event to be helpful for everyone. We'll continue to listen to the voices from the market. So first, let me start with the Financial Supervision Direction. First, the overall securities industry in Korea. As of year-end 2020, 22 foreign securities companies are operating in Korea, 11 subsidiaries and 11 branches. The total asset of foreign companies is constantly increasing to mark 35.6 trillion Korean won, accounting for 5.885%. The profitability, the net income of foreign companies was 594.3 billion last year, showing solid performance. Now let's take a look at major risk factors. First, the structural changes in the post-COVID era. The individual investors who emerged as a leading force in the stock market raised risks of short-term investment trend and stock risk volatility. And the connectivity between securities companies and FX and money market also increased. Digitalization in the securities industry with its platformization and non-face-to-face trend can also bring unexpected risks. The second is direct investment into high-risk assets. Individuals' direct investment into domestic and overseas stock market is increasing, as well as leveraged investment includes CFD and credit loans. As these investors are exposed to risk of price volatility and possible damage, it is necessary to recognize investor protection as a critical factor. Third, real estate-related shadow banking and alternative investment. Persistent low growth and low interest rate market remains as systemic risk factors by increasing high-risk investment with shadow banking, while increasing offshore and alternative investment of securities company can lead to soundness and liquidity risk. Last goes with hedge fund and offshore real estate funds. The redemption delay of some PFs undermine overall market confidence and constrain the market itself. We also need to take care of potential risk from aggravated global real estate market, such as possible loss in offshore real estate fund. Factoring in these major factors in the capital market, the FSS set the following 4 principles for the supervision direction. First, systemic risk management in the capital market by systematic monitoring and response to risks. The second is stability and trust in the asset management market by improving regulatory system for stronger accountability. Third, investor protection-centered business environment by more efficient supervision on vulnerabilities. Lastly, enhance feedback in supervision and examination for fair business environment. Now let me explain the supervision directions for securities companies. First, figuring out new risk factors in the capital market emerging in the post-COVID era and respond to it. After the stock market shock from the pandemic, direct and leveraged investment is expanding to require reinforced supervision such as credit loan monitoring index development. We are also planning to monitor to minimize possible cliff effect after the termination of supportive measures. And as climate finance and big techs are garnering attention home and abroad, we will monitor the ESG standards introduction status among credit rating agencies as well as financial business status for adopting these. Second, close monitoring and systematic response to risk factors in each segment. This includes systematic monitoring on foreign investment trend and leveraged investment of individuals in the stock market. And also regulation status checkup for LP market soundness in the money market. And for the OTC derivative market, preparation checkups for introducing margin requirement for non-centrally cleared OTC derivatives. Also, we will continue to supplement the risk dashboard in operation to elaborate risk recognition system while publishing the capital market risk analysis report to share potential risk factors. In addition, supervisory measures will be prepared for soundness and risk management of KRX and other capital market infrastructure institutions. Next, as security firms grow and diversifies in business, we will come up with differentiated soundness supervision schemes. Unlike current NCL, a single capital regulation schemes, we will review the roadmap for introducing new multi-layered capital regulation system. In terms of real estate and alternative investment, close monitoring will continue for firm establishment of newly introduced regulatory system. For comprehensive financial investment businesses, measures to promote corporate financing and venture capital provision will be reviewed, and education will also be strengthened. Lastly, improving and modifying regulations in accordance with the newly categorized system and reinforce investor protection. With the newly introduced Financial Consumer Protection Act, the FSS will examine compliance status and figure out any need for further improvement. We will improve manuals following the Chinese wall regulation changes into principle-centered one and monitor adoption status for newly introduced rules. In addition, we will improve current publication practices that only focus on large companies and purchases and create an environment where investors are provided with diverse information. This closes supervision direction for security centers, and now the examination direction will follow. Good afternoon. I'm Cheo Won-woo, Director General of Financial Investment Examination Department. I'd like to express my gratitude to all the executives and employees of foreign security companies for sharing your time. As the pandemic outbreak continues for more than a year, it is my regret that we have very limited chance to meet you in person. But still, I am very pleased to have this opportunity today. I look forward to see this pandemic comes to an end as soon as possible and have more opportunities to communicate. Today, I'd like to talk about the examination direction for securities companies. There are three main parts. First, the recent 3 years examination and enforcement status, and then the matters pointed out during examination, and lastly, 2021 examination direction follows. First, recent examination status. A total of 239 examinations were conducted, and 17 among them on foreign securities companies, accounting for 7.1%. As you are well aware of, the domestic securities companies face major issues that garnered a lot of attention regarding dividend errors and Lime Options funds. So the examination of foreign security firms have relatively decreased. As a result, the number of long-term unexamined companies for more than 3 years is increasing among foreign companies, reaching 15. This year also expects examination capabilities concentrated on examination and sanctions related to redemption suspension cases. Lack of external monitoring for a long period of time can weaken compliance and internal control system among securities companies. So, we plan to conduct prioritized examination on long-term unexamined security companies first. Regardless of these examinations, we urge you to keep your effort to maintain the internal control system of foreign securities company. In particular, individual investors are paying more attention than ever to short sellings, which resumes from May 3rd. So with strengthened penalty for illegal short selling, please check thoroughly on internal controls related. Let's take a look at recent enforcement actions taken. For the past 3 years, there were a total of 32 institutional sanctions, and 2 of them were taken against foreign companies. And 89 cases for monetary sanctions, including 6 from foreign companies. Measures for executives and employees, and a total of 145 enforcement actions were taken, including 3 from foreign companies. Let's move on to matters pointed out during examination. The business management related cases were the most, with 210 cases, followed by 132 for internal control, 125 for brokerage, 88 to IT. For reference, issues related to internal control include weak internal control system regarding equity capital investment, providing economic profit, and thorough internal audit. For foreign securities firms, matters related to internal control were the most, with 16 cases. And recent cases pointed out during examination. The first one, I think you may be well aware of, is the transferred ESPP shares in the domestic security companies. In April 2018, a securities company, the ESPP shares worth of 100 trillion won were mistakenly transferred to the accounts of 2,000 employees. Some of them placed a sell order, and transaction of 5 million shares were taken, which faced partial business suspension. Other major cases include violating restriction on trading financial investment product, violating prohibition of unauthorized OTC-related business conduct. Let's take a look at foreign security companies' cases. The first one goes with violation of Chinese wall regulation. A foreign securities company provided information on the sale of financial investment product to its domestic or overseas affiliates. Considering the nature of foreign security firms, having many transactions between affiliates, such as headquarters located overseas, we ask you to pay special attention to comply with these regulations. Other cases include OTC trading to individual investors, submission of derivatives, business reporting, omitting important statements. The next part is examination direction for 2021. This year, we set 3 goals: reinforcing investor protection, establishing capital market order, and enhancing risk management. And we'll carry out examination focused on highly damaged areas and vulnerable areas. So these reinforcing investor protection on highly damaged area starts with examination on security firms with redemption suspended hedge fund for mis-selling issues. We will start with sellers with higher probability of mis-sellings, with higher number of complaints. Second, the examination on overall sales process of high-risk financial investment products. This includes monitoring compliance status of complex products, business conduct, so that financial companies can establish internal system to prevent damage in advance. And we will focus our examination where securities companies' self-management is weak. First, our examination will be placed in incentive-compatible measures and intensively examine illegal and unfair practices in the process of issuing or selling derivatives-linked securities, and closely monitor the internal evaluation process and avoidance of public offering regulations. And closer look at alternatives investment status. The prolonged pandemic is increasing concerns about losses from investment into overseas hotel and aviation industry. So we'll focus on and follow-up management of overseas investments. In order to better prepare for increased volatility, we will put effort to enhance the industry's risk management capabilities. Further examinations on risk management related to SPCs and DLS will be strengthened. We'll focus on issuance of high-risk securities using DLS that guarantees and fund control adequacies for SPCs. Second, we'll examine liquidity risk management for strengthened response capabilities. With stress tests reflecting extreme market conditions, and monitor the effectiveness of contingency plans. Third, we'll also conduct examination on securities-related institutions. To ensure the market stability and operation, overall examination will take place on securities-related institutions. Lastly, we'll support securities firms to improve their internal control weaknesses and strengthen their investor protection system, and enhance their self-corrective function by promoting internal audit council announcing examination focuses. This closes our session of examination direction for securities company. Thank you for listening.
Thank you, Director Generals, for your insightful presentations. Now, we will begin the Q&A session on the financial investment sector. During the presentation, we have received some comments and we're going to answer to these questions. This is the first question.
What are the major market risk factors to assess domestic securities market? These are the issues that garnering attention from investors and the financial companies as well. Last year, the stock market survived the pandemic shock and escaped from so-called box B earlier than expected. As the individual investors are increasing with more participation, these new structures can bring in another risk factors. And the leveraged investment reaches the highest, which can bring another risk sequentially. And more participation from individual investors can expand market base, but also brings new risk factors in the stock market.
Thank you for your response. And now the second question will follow.
검사 계획이 있으신가요? 이 부분도 많은 시청자분들께서 궁금해하시는 질문 같은데요.
Do you have any examination plans for foreign securities companies?
평상시에 상시 감시 등을 통해서 불건전 영업
By constant monitoring, we are taking a closer look at unsound business conducts or companies. First, but please understand that the specific examination plans, including company lists and timing, are not to be disclosed. And among foreign securities companies, many have not been examined for a long period of time. Still, we ask you to keep up compliance and internal control efforts to prevent any accidents regardless of our examination.
네, 국장님 답변.
Thank you for your answer, Director General. Now is the third question. What is the opinion of the FSS on the claim that the resumption of short selling is against global standards?
예.
Short selling reflects negative information on the stock price and suppresses bubbles from over-evaluation. Makes sense. However, the full-scale resumption of short selling after more than 1 year of prohibition can bring huge impact on the market. And so, partial restarting can be a better option for soft landing.
Thank you, Director General. Due to time constraint, we're going to have one last question. And the last question is as follows. What are major areas of concern regarding this year's FSS examination for securities companies? So, do you have any particular area that financial companies need to focus on in order to prepare for examination?
측면에 대해서 생각해보고
There are two major factors. In terms of investor protection, it is important to prevent illegal and unfair business practices. And another aspect is soundness of securities companies. And we'll focus on risk management of alternative investment. And alternative investment into overseas real estate have been active and requires relevant internal evaluation or follow-up measures.
Thank you for your answers. Let us wrap up the Q&A session on the financial investment sector. If you have any questions, even after this broadcasting, please email to us addressed on our official webpage of Financial Hub Korea. Now, we will welcome presenters from the asset management sector, while the presenters from the financial investment sector leave the stage. Once the presenters are seated, we will proceed with the event again.
이제 2부 순서로 자산
Now the second session starts with the asset management, supervision, and direction. We have Director General Lee Ju-hyun and Director General Kim Jung-tae from Supervision and Examination Departments. First, we'll start with Director General Lee Ju-hyun.
Good afternoon. My name is Lee Jun-hyun, Director General of the Asset Management Supervision Department. First, I'll briefly introduce you to the overview of the asset management industry. As of end 2020, there are 326 asset management companies operating in Korea, with their total assets and equity continuously increasing. In particular, net income has greatly improved thanks to the increase in fee income from larger AUM as well as rising profit from the booming stock market following a temporary market shock from the pandemic. As of the end of last year, 25 foreign asset management companies are operating in Korea, taking up about 10% of total fund and 7% of the total asset of the domestic market. If we take a look at the AUM, the volumes of total fund and discretionary investment are both on the rise, with private fund taking a greater role in the fund market for the past several years. With diversifying investment destination, fund type has been widened to include real estate and special asset funds, along with the size of foreign fund continuously expanding as well. So that's about it for the market overview, and I'll now move on to our supervisory directions for this year. For 2021, the FSS would like to promote the following 3 supervisory goals in monitoring the asset management industry. The first goal is to continuously manage potential risk factors within the market. As you know, due to the suspension of PEF selling last year, the fund market, asset management industry, and investors in particular have all suffered a hard time. On and after, various measures were made to improve relevant systems to restore undermined trust within the asset management industry. And all the market players are putting their utmost efforts indeed to this end. However, the economy still hasn't been normalized from COVID-19, and unexpected changes can always arise in the market. Thus, I believe that this is essential that we enhance the risk management capability of the asset management industry more than any other times. Most of all, asset management companies themselves need to respond to possible crisis by vigorously managing risk in advance. And the FSS too will spare no efforts to preemptively identify potential risk factors in the market, as well as to respond to the risk in a timely manner, and thus strengthen the stability of the asset management market. Specifically speaking, we will systematically respond to the industry's inherent risk factors, such as the herding behavior in high-risk assets. We will thoroughly analyze the risk factors stemming from the herding behavior into high-risk assets and expand volatility, and will tighten ongoing monitoring on launching and managing funds to prevent possible risk from emerging. Also, the FSS will strengthen the risk management of liquidity risk on open-end funds. To this end, we'll check whether companies have adequately conducted the MMF stress testing, which has been implemented at the end of last year in order to proactively respond to potential crisis. Regarding the liquidity stress testing on open-end funds, which has been implemented last April to improve the private equity system, we will conduct test operation to develop an adequate methodology and best practices, share these with the market, and thereby enabling financial companies manage liquidity risk on their own. Next page. Furthermore, we'll closely monitor and analyze the risk management of alternative investment so that we can properly respond to possible risks. In managing alternative funds like real estate funds and special asset funds, asset managers have to comply with the Guideline on the risk management of alternative investment funds from October 2020. By checking on the implementation of this, we'll closely examine the internal control level of each company. At the same time, we're going to examine the management of foreign fund of funds and relevant risk management procedures in order to encourage asset managers deal with foreign funds of funds more strictly. Our second supervisory goal is to strengthen supervision to restore trust of the asset management industry. Recent incidents related to DLF, Lime, and Optimus funds show that the mis-selling practice of asset management companies can inflict huge loss to multiple investors. Concerning unfortunate incidents of private funds, not only those directly involved like the asset management companies, banks, and securities companies, but also the fund market in general lost trust a lot from the investors. And we all know that the asset management industry cannot survive and grow further at all if there are no investor trust. Given such, the FSS will strive to make the asset management industry healthy and sound so that investors can have trust again and fully tap into the asset management industry in increasing their wealth. To this end, we plan to continuously overhaul the operational process related to private investment this year. We're first going to enhance the supervision of funds to improve transparency of private funds. Indeed, there is a system called FundNet of the Korea Securities Depository, which cross-checks the balance of assets incorporated into private funds. Once this system is completed, we believe transparency of fund management will be dramatically improved, leading to restoration of trust into the asset management industry in return. Moreover, we plan to establish a guideline for trust companies so that they can monitor funds in a more effective and systematic ways. And we'll set up a guideline for assessing fair value of non-marketable assets so that the value of assets incorporated into funds can be fairly evaluated. Furthermore, we will tighten monitoring on unjust fund managing practices. With the recent amendment of the Capital Markets Act, companies now have an extended duty to report investment structure, incorporated assets, and other matters on private fund to the supervisory authorities. We also obliged asset management companies to report their internal control operation on a regular basis. Moreover, companies now have to provide more information to investors on private funds, while the operation of OEM funds, evasion of regulation, and other acts of unfair practices are inspected under stronger regulations. The FSS will put an unwavering effort so that all these improvements can actually translate into fruitful results to establish a healthy business order within the market. The third main goal is to enhance relevant systems to invigorate the public offering funds. The FSS will actively work hand in hand with the FSC so that public offering funds can become a healthy means of growing assets for investors. To this end, we will promote follow-up measures to the plan to enhance competitiveness of the private offering funds, which the FSC announced last January. For this to happen, we intend to improve systems on sales fee and commission, promote the use of online sales channel, and support the launch of various public offering funds. In this process, we'll actively cooperate with the FSC and other relevant associations to come up with adequate measures. Next, we plan to establish a disclosure guideline for ESG fund, which has been gaining attention all over the world in recent days. Specifically, we will establish documentation standard on fund declaration, share best practices, and distribute those cases so that ESG funds can be actively rolled out in the fund market. And we'll also make sure there's no blind spot in investor protection by thoroughly looking into the details of the reporting documentation, especially those related to risk factors. So this is all for my presentation on the supervisory plan for the asset management industry. Now, the presentation from the Asset Management Examination Department will follow. Good afternoon. My name is Kim Jung-tae, Director General of the Asset Management Examination Department. The microphone is not working. Okay. Although the size of Korea's asset management industry is continuously increasing, fund investment by individual investors is rather falling, with public offering fund less than half the size of the major economies. As such, Korea has a weak demand base and there's a lot to improve. In the circumstances, the FSS would like to preemptively respond to possible instability and strengthen investor protection to build trust in the asset management industry and thus lay foundation for growth. And we'll focus on 3 key tasks to this end. First, the FSS is going to strengthen monitoring on asset management companies to establish a sound market order. Examples of PF-related incidents, failures in managing fund risks, and acts of violation in asset management are calling for stronger investor protection. In addition, less experienced investors are increasingly flocking to the stock market, giving rise to illegal practices of quasi-investment advice. And we have to conduct examination on the foreign funds so that we are going to check whether the asset valuation has been made fair and monitor unfair business practices. And with investors that are less experienced walking into the stock market, giving rise to illegal practices, we are going to strengthen monitoring on quasi-investment advice. At the same time, we are going to tightly inspect operations of the investment advisory and discretionary investment. This includes supervising mobile non-face-to-face investment advertisement, investment recommendations, and conclusion of contracts. Second, we'd like to improve the overall examination process to make it more effective. As the asset management industry expands and its scope of work diversifies, we now have more financial products to monitor. And to meet all this demand for examination with limited resources, financial companies need to improve their self-correction capabilities. Thus, the FSS will strengthen the off-site monitoring system, improve companies' internal audit, and thereby making our examination more effective and sound. Specifically, we plan to conduct incentive-compatible examination in consideration of each company's self-auditing capability, while establishing a special consultative group to help small asset managers set up an effective internal auditing system. And as the MMF stress testing became mandatory for companies dealing with public offering funds from 2021, we'll also inspect whether companies have a well-functioning risk management team. The third pillar of our plan is to tighten response to potential risks. To restore trust of the asset management industry, we have to identify and respond to potential risk factors in a preemptive and effective manner. To elaborate, we're going to analyze the risk related to REITs companies on a comprehensive basis. This includes monitoring the loan and trust account of leveraged land trust, risk of land trust based on the commitment of construction, as well as the internal control of these trust companies. And as well, we plan to intensify examination on unfair investment recommendation, any act of pursuing one's own or the third party's interest, and intervention of the LP into GP's businesses. At the same time, we'll tighten inspection on wrongful tradings with stakeholder. Any investment or credit offering by major shareholders, affiliate companies, and other stakeholders will put under scrutiny, while looking closely into unlawful financing using the so-called cross-investment, like making contracts with the third party. Moving on, I'll talk about the recent examination case on risk management standard. Company A, which is an asset management company, set up a master feeder fund that mainly invests in foreign loans and entrusted this fund to its foreign affiliate. By law, a collective investment business shall establish proper standard to identify, assess, and manage possible risks, set the level of risk that an investment scheme can take, and make contingency plan in times of emergency. However, Company A did not come up with a risk management guideline on identifying and assessing possible credit risk of the loan, and failed to set the level of credit risk that its fund can possibly take. And at the same time, it had no contingency plan to secure enough liquidity and maintain fairness among investors, which is necessary in case there's a large-scale reselling of the fund. On this case, the FSS has imposed institutional caution and administrative fine against Company A while issuing cautionary warning to its CEO. In case a collective investment business does not have a standard to identify, measure, assess, and control risk, investors may be hindered from making rational investment decisions and thus can suffer substantial loss. Since there is no guideline to notify serious risks such as bankruptcy, asset managers cannot identify risk at a timely manner, leading to investors not getting relevant information and thus failing to make rational investment decisions. In addition, by not having response measures for expected contingencies, asset management companies will not be able to properly respond to emerging situations and thus can possibly fail to minimize the scope of investor loss. This is the end of the presentation on examination. Thank you.
네, 이상으로
This closes the presentation for Supervision and Examination Direction for Asset Management Companies. Now let's move on to Q&As and any of your comments. We have gathered some of your questions in advance, and these Director Generals will answer for your questions. The first one.
The FSS has been delaying the registration of foreign funds, leading to difficulties in financing. Do you have any plans to improve this matter? Regarding this, Director General of Asset Management Supervision Department will answer. The press has continuously reported on delay in foreign fund registration, and we do realize that companies are discontent with it. Although the demand for foreign fund registration has been continuously increasing along with expanded investment into foreign funds, our registration process has been somewhat delayed due to the recent COVID-19. So to facilitate a faster process, we separated our fund review team into two last February during the company reorganization, each in charge of public offering funds and private investment funds, and assigned more personnel into the foreign fund review team. In this way, we believe we'll be able to process faster and effectively. And at the same time, we will consult with the FSC to streamline the registration requirements as well as required documentation. Thank you, Director General. Followed by the second question. As Director General said during the presentation, the FSS is going to conduct incentive compatible comprehensive examination. What is the specific examination plan? We choose the subjects based on their financial soundness, internal control, governance structure, number of complaints from consumers, and fund management status. And those with insufficient score are our target. As well, we are going to choose those who have not been subject to examination for a long time. To ease examination burden of companies, we'll consider the latest examination history in this process as well. And due to the ongoing COVID-19, examination subjects and schedule are flexible as of now. Thank you for your answer. Now the third question. What is the overall examination plan in the era of COVID-19? This is going to be answered by the Director General of Asset Management Examination Department. Though COVID-19 persists, there is an increasing need for on-site examination due to numerous cases of delayed fund repurchase, calling for a need to conduct on-site examination. And we're going to carry on with our original examination plan, and except for those inevitable cases, and in consideration of the COVID-19 situation, we're going to actively utilize on-site examination. And written examinations will also be conducted where possible. Thank you for your answer. And we're going to have the last question now. Asia Region Fund Passport was implemented since May 2020. Do you have any plans on this? And Director General of the Asset Management Supervision Department will answer. Asia Regional Fund Passport aims to establish a common standard on registering and selling funds for 5 member countries, including Korea, Japan, Australia, New Zealand, and Thailand. Although relevant legislations on Capital Markets Act has been revised last year, it's still in its early stage of implementation, and its member countries are closely cooperating to help it successfully take root. And up until now, there has been no application to register ARFP in all member countries. And since Korea is going to be the chair country, the FSS and the FSC will co-organize a regular meeting of the ARFP Joint Committee on April 22nd. And we will listen to the voices of the field to implement the passport system smoothly. Thank you all for your answer.
대해서는
So I think we have covered some of the major questions, but if you still have some questions or comment or your say, please visit the Financial Hub Korea website and leave your comments or questions. This closes the Supervision and Examination Direction for Asset Management Companies and the first session of the FSS Speaks 2021. Thank you for your attention.